Right back up, folks. That one down day on Monday, we missed our buying opportunities. Right back up today, 11 quarter handles. Microsoft over 500. Merc makes a big purchase. Talk about some ratings that fall out from the ratings yesterday. 8:35, Alicia Reese joins us from Wedbush Securities to cover the movie theaters. Fun. Okay, folks, let's get it started. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, folks. Up 11 handles, 62.83, knocking on the door of yesterday's high. Inside day, keep an eye on that. The buck up slightly. The futures are up 12 cents, 97.29. TLT just leaking here, down 14 cents, 85.89. USO steady, moving up 23 cents, 77.19. Gold and silver both in the red. The GLD, that's down $1.31 at 62.85. SLV still holding 33, down 11 cents at 33.18. And Bitcoin futures, they're up $305, 109,520. I'm gonna bring in Dennis here, and we have to start the show out here on a little bit of a somber note.
Yeah. We lost one of our longtime listeners. I was informed last night. Ivonne Shore, been listening to us for a decade, passed away last night. We want to give our condolences to her daughter, Robin Shore-Steckel, who has been a listener for the last decade as well. We actually had them on as guests. You know, they were some of our first-time guests a number of years ago there. Ivonne was a very sweet lady, great listener, and we just want to give our condolences to her daughter, Robin.
Yep, I think we did a segment. I'm trying to think.
I remember the segment. Yeah,
I know.
I remember talking with them. It was a lot of fun. They were Jeremy Newsom. They were with Jeremy originally.
Yeah.
And then they started listening through. Jeremy had told them about pre-market prep. And then they obviously came over, and they're still good friends with Jeremy. And Jeremy messaged me last night, too, to let me know as well.
Yep.
So, again, we just want to give our condolences to you, Rob and Ivonne. Great listener for a long time. Thanks so much, to Robin and to Ivonne for listening to us for so long. We love our long-term listeners. One of our first listeners.
All right. Let's get to the markets here. And for a Wednesday in the summer, we got a lot of stuff to talk about.
There's news all over the place, individual stories here. I mean, we can start with Merger Wednesday. Here's Merger Wednesday, and the big merger of the day. We got Merc buying Verona Pharma, VRNA, for $107 in cash. Joel's asking me this morning, why is Merc not trading down? I'm going to give you a quick answer why it's not trading down. Typically on cash deals, the risk arbs aren't involved. So it's typically like you see, oh my goodness, they're paying a big premium, they're going to knock the stock down. It's the risk arbitrage mechanism that usually knocks the acquirer down, because when you're putting it on, you're shorting, the acquirer, and you're buying the ones getting acquired, and you're trying to make that spread. There's no spread to be had. It's a cash deal. So VRNA 107 is trading at 104.88, which is simply the time value of money, 2 points until the discount. It's discounted for the time value of money. So that's why you don't see Merc trading down, is because the risk arbitrage mechanism isn't involved in cash deals. On stock deals, they do often hit them down because they buy the acquirer, or they knock the acquirer down a little bit, bring the acquired company up a little bit, and that's how they make up the difference with the spread. Now, if we go over to Coreweave, and with CORZ, their recent merger, why didn't Coreweave go down much? Simply, the same story here is what we said, and it was actually an analyst on CNBC saying the same thing that I was saying, is the borrow is too high. So the risk arbitrage mechanism is broken here simply because nobody can get a borrow, or at least, a cheap borrow, because if you're paying 180% for it, it doesn't make any sense to try to pick up 20 or 30%. So that's why that mechanism, is not working there either, because the borrow is too high. So a little bit of market structure for you guys here starting the morning. But
Yeah, where
Guest
would
on
CoreWeave
CNBC,
be trading at? Where?
well, Guest on CNBC made a fantastic point. He's like, why would you buy CoreWeave right now at 153 when you can buy CORZ, which is the equivalent to buying CoreWeave at 118? So you can just quickly do the math. Now it's up a little bit this morning, CORZ. So if we just do our trusty calculator, bring it up, it's simple math. Like, I mean, this is grade 2 math here, maybe grade 3. When did they start learning multiplication? Take 14.22, we'll do this with you, times the ratio, which is 0.1235, will give you the price of where CoreWeave would be. So, sorry, no, now I did it, but it's 14.
Yeah, I
Sorry,
guess
it's
it's
on CoreWeave. So I got to
higher
get the
level,
CoreWeave
man.
price. I don't know why I grabbed the CORZ. So 153. Yeah. And the ratio is, no, 14 divided by 0.12. Where is it? 1235?
Segment brought to you by Texas Instruments.
113 only. So 14, if it was at 14, it's $113. So you divide by the 0.1235. Look, I can't even do the grade 2 math. It's too early. So 14 divided by, it's 113 only right now. So that's the difference. So why would you pay a CoreWeave 153 when you get a 113? The only reason to do that is you think the merger is not going to go through. So that would be the one reason to do that. But if you're like all hot for CoreWeave, probably a lot better to sell your CoreWeave and buy CORZ to make up the difference. The CoreWeave, but our risk arbitragers are basically betting that CoreWeave is going to go down here to make up that difference. So I'm not long CORZ because I think CoreWeave could go down too. But hard going down when you can't get a borrow. There you go.
Is that kind of sneaky though for them to do that? I mean, I guess not. You know, they know their stock. You know, it's hard to borrow. They do an acquisition like that. I mean, there's nothing, no rules against it, right? I mean, it is what it is. But we'll keep an eye on that. That's interesting. We didn't start out, Dennis. You talked about the bear thesis. So, well, jumping to SMCI, it gets hit. It has a rating change down 55 cents. They came in, they bought the dip again. I mean, as much as you want to try and poke holes in this market and make, come up with some negative scenarios, it's just getting harder day by day.
Well, yeah, we know tariffs are getting kicked down the road. We did do the 50% copper tariff, which obviously helped stocks like Freeport McMoran last night. But just a couple examples of why the bulls are in complete control is you get a stock today. Well, SMCI catches a underweight, which is a sell and a $35 price target, and they knock 50 cents off it. Like they can't even bring it down. In normalized markets, that would be down $1 or $2. It's down 55 cents because the bulls are in complete control and they're like, oh my gosh, a dip. I'm just going to buy the 50-cent dip. And then, even looking to, ratings from yesterday, you get JP Morgan selling off significantly on a sell rating. While here, welcome to the bull market, where not only investors and traders are buying the dips, but the analysts are buying the dips as well.
Wow.
So you get Keith Briette, after yesterday, an analyst downgrades it to sell, or at least initiated with the sell at HSBC. Or no, it was a downgrade. I think it was a downgrade. You get JP Morgan, you get Keith Briette coming up and raising up and upgrading it to outperform with a $327 price target.
Like that.
So they just waited for one little dip and they're like, upgrade JP Morgan. So the stock's popping right back. So, I mean, that's what we have supporting this market is just underneath demand, not only from traders and investors, but from analysts as well.
Yeah, Goldman Sachs, we've talked about at STN Room, a potential gap fill there. I think John Higgins may have been trading that, but that came down and the back the gap fill. BAC, I mean, it got hit. It's just big, thick stock came into kind of stopped going down where it should have. You had multiple lows at the 47.20, 47.30 area. I'd say, put another low or two in this area, then I would not way this market's been traded. I wouldn't be surprised at a gap fill. And just going back to KBW, they're pretty good in the banks, aren't they, Dennis? Isn't that more of their strong suit? Yeah, I do. They were actually acquired by Stifel. I know this. I don't need to ask you. Yeah, that's like their specialty. Is the bank stocks. So
their specialty is upgrading JP Morgan here this morning. There's a lot of ratings, which we can get to later on in the show. There's just a pile of ratings here, but there's a lot of other news here too. Mobileye was interesting last night. We were covering this live in the STN room last night. And, this is on the back of the big Intel move as well from yesterday, because Intel had a huge move. But Mobileye, after the bell, comes out with an offering, like a secondary offering. They hammer the stock. So if you look, and if you can zoom in, Joel, really on that close after hours action. So they do a 45 million secondary share offering there. And the stock tanks, like literally go to Mobileye first, So the stock tanks all the way down to, how low do we get?
They got the 16 handle there.
Got the 16 handle. And then a minute later, they come out with deal news with Taiwan Semiconductor and guidance, and they raised guidance. So, I mean, they were trying to obviously, they knew this offering was going to hit the stock. Kind of smart, actually. And then, but look, we got guidance raising here, too. Then the stock rips up to 21.
I got 2050, yep.
2050. So, I mean, we literally went down to 16, down $2, then get the $2 loss back and up $2. Now we've settled back and we're kind of flat. So after all that, action. But there was wild action in this thing last night, selling off 10%, then rallying 20%, then selling off back 10% to kind of just settle in where it closed. But, crazy. I don't know how many times I've seen that stock do an offering and then raise guidance a minute later in a second press release. So caught all the shorts. For sure, catch them, oh my gosh, because you get the algos that would be hitting every bid. And they're like, yeah, we're going to make some money. Those algos are all partying in the street. Not that they speak or think, but the algos would have been making some money. The people behind the algos have been like, yeah, huge hit. And then the guys come out, they're like, that's what those algos have been like. That's officially what they do. The algos are like, no, more get there, buy back, buy.
How did you sell that at 16? Actually, the pre-market low is 1668. On a day like this with the ups and the downs and the all arounds, I like to keep an eye on that closing price at 1864. If everything settles in, they'll take it. There's a nut if you're looking for a breakout. You got to look at this night. Let's call it 1930, 1935. 3 of the last 4 highs in that area. So good area resistance. I think the best thing for Mobileye shareholders would be if you could build a little base here. I mean, I know I'm going to throw out the pre-market action. I'm just going to look at the last 2 days. Actually, the last 4 days, you had the boys and girls were stepping up at 18. You had a low at 17.99 and 18.12. So if that area is defended early on, boom, you take out the closing price. You challenge that 1940. This would fall into the laggard category for sure. This Mobileye. And you said Intel. Just we'll take a quick look at
Intel had a huge move yesterday, and Intel still owns 88% of the company. But part of that offering, believe it or not, was Intel, I believe, selling some of their shares. So I'm not even sure it was dilutive. Let's go look and see if this secondary offering get a little bit
I think it was maybe all of Intel selling their shares. Would that make sense?
Public offering of 45 million shares overseas. I'm just reading into it now. Has agreed to sell. It can't be all of their shares. I would hope it's not all. They were like 88% of the company. So there's a lot of shares outstanding. But was it Intel? Was it Intel for sure?
Yeah, the whole offering is.
I'll look too, Dennis.
Yeah, Mobileye.
Go dig. We got the digging in the background.
Okay,
because it pisses me off. So okay, I know I'm not supposed to cuss much. Mitch says it hurts the YouTube algo, but it ticks me off that I was an Intel shareholder and we knew they had Mobileye in there, and then they didn't spin it off. They didn't give us any shares in the spin off. They're like, we'll just hold all the stock. Well, no, you know why? That sucks because Intel's stupid with it. And now they're going to sell this stock at a discount when they could have gave it to the shareholders. The dumbest spinoff ever.
I know.
Dumbest one ever, possibly Intel. They can do nothing right. I'm so mad about that. So those Intel shareholders like, oh, eventually they're going to spin off Mobileye and we're going to get shares. And I'm like, what do you mean we're not going to get shares? Oh, we're going to spin it off, but we're just going to hold all our shares within and not give them to her. So, and then we're going to sell them at a stupid discount because the company's too dumb.
Does that make
it better not be all the Intel. I'm Intel today if this.
You know what? Just to rile you up a little bit, does that bother you more than when Michael Dell pulled the rug out?
No, that was the worst. Correct, Joel. So Michael Dell, you can say, "Oh yeah, great company to be invested in." Yeah, unless you're in a financial crisis and the stock goes from 80 to 9. And I'm literally, I didn't ride it all the way down, but I rebought like 15. I'm like, I'm going to buy this Dell because eventually this thing's going to be a monster and it's going to come back because it's way undervalued. He took it private at 11 and the shareholders voted yes. And I'm like, seriously? Seriously? I'm voting no. It doesn't matter. The stock was $80 at one time. And Michael Dell's like, well, my stock's undervalued at 9. I'll take it private at 11. So he makes all the money. So he made all the money and the shareholders all got screwed. That's what happened, folks. They don't tell you that stuff on, CNBC. They're all friends with Michael Dell. Oh, it's so nice for you to give your 20% premium to all your shareholders, $9 to $11. Well, the guy bought 80. Yeah. What about him? He's not happy he got taken over. And now you see it comes back public, and it's $124 a share. And I am invested in Dell again because I never wanted to be uninvested from it. But yeah, so he stole all the shares from us at $11. Brutal. That sucked. So yeah, I'm not a Michael Dell fan for that reason. I love his innovation. I love everything, but he screwed us on that deal during the financial crisis. Screwed us and took out all our stock at the bottom at $11 or $12 or something. It was.
I think it might have been 13, but it doesn't make it.
Ooh, it was like 80 at the all-time highs. And was trading at like 6 times earnings or 7 times earnings. Because at the end of the financial crisis, it was nothing but like just dust and garbage. Like everything was just ridiculously undervalued because they just hammered everything. The NASDAQ went, folks, the financial crisis, the NASDAQ, the index. For you newbies who don't look at market history and your charts don't go back further than 10 years, the NASDAQ in the year 2000 was 5,100. At the end of the, I think it was the end of the well, actually, it was after the tech bubble burst. But after the tech bubble burst, it was 1,100. That index lost 81%. Could you imagine today if the Qs lost 81%? Could you imagine? Can you imagine like the carnage, like in social media? Like that happened for real. The index went down 81%. S&Ps were down like 56%, but the NASDAQ was down 81%. So just imagine today, the Qs. What would the Qs be if they fell 81%? Let's go do the math. We're on tangent city here, but it's kind of fun.
Yeah, you.
553
times.
That would be a 447 point fall. So the Qs would be down at like, what is that? $105. Could you imagine? Could you imagine if that happened? People would just be like, retirement accounts destroyed, everything. Like, it's possible, man. Like, nothing's impossible. I watched that happen during the tech bubble burst. Now, it was silly because that NASDAQ run went from 3,000 to like 4,000 like 6 months, and then 4,000 to 5,000 like 6 weeks. So it was all fluff back then. But man, that would be an epic fall. Just imagine that. Just imagine. Yeah. Anyways, moving on. That'd be the Q's back at $100. That would be the equivalent, basically. Q's back at $100. Holy, the carnage would be just incredible. It'd be a lot of fun trading that, though. Okay, back to the news.
Kevin Hassett, you want to talk about
more for the bull thesis. So they're talking about Kevin Hassett being the lead candidate to be the new Fed chair, to replace our chair. So Kevin Hassett is a Trump puppet. You get Kevin Hassett in there and interest rates are going down the next day. Like, so the bear thesis is so full of holes because we know Powell's term is up middle of next year. So you got a year left, even if he doesn't lower rates. And then you're going to see rates just drop substantially because Kevin Hassett gets involved. And, obviously they don't replace all of them, but they're going to, he's going to be pushing. If he leads the whole thing, going to be pushing. You'll see rates like basically the second half of Trump's term, it's going to be a low interest rates. So, because there's no way they're renewing Powell. So there you go. So, I mean, bear thesis there too is full of holes. So maybe we should be like anticipating when we start getting close to, that time to be buying the TLT. Because I'm telling you, rates are going to go a lot lower at the end of next year. They may not go down this year, but they're going a lot lower a year from now.
Well, yeah. When's JP out the door? are supposed to be done.
Do we have a date? Brentster, dig that up.
I think
I've heard multiple. I heard middle of next year.
We do have a
I don't know if that's
date.
the official like time he's out or if that's when his term.
I don't know if it's like a hard date, but it
right
is
as soon as his term's up. I don't know how
the
all that
second
works.
half. I don't know if we have a date, but it is the second half.
Yeah. So
I
about a
checked,
year
like,
from now.
last week.
About a year from now. So I mean, you're sitting here and you're thinking, yeah, you know, there's so many problems here. Eventually, this market's going to crash. Well, is it going to crash? Because you're going to have a lot of like support a year from now. Now the market doesn't look out a year from now, so maybe there's going to be other crises before that. But just think, you know, there's actually lower interest rates coming a year from now, in like pretty much undoubtedly, because there's no way Trump, whoever he appoints, there's no way he's going to put somebody hawkish in there. He's going to put the most dovish of doves. Kevin Hassett would be very good for lowering interest rates.
I mean, I like what you said. A lot can happen between now and
For sure.
Another year. But let's see here.
I mean, the TLT, just do a technical on this, Joel, because we're selling off.
Just selling.
The market ignores it. The market doesn't give a crap about interest rates, right? All it cares about is going higher. That's where we're at. You know, bulls are in complete control, just eating up bears, chewing them, spitting them out. You know, there's just no bears alive anymore. So TLT goes down. Who cares? IWM used to be linked with the TLT. Now it goes up too. So XBI used to be linked with the TLT. Now it's starting to go up too. That's where we're at. Bulls in control. Welcome to the bull market. Where now everything's going up. Hard to bet against it right now.
TLT, bulls better step up here pretty soon. I mean, we got some good jobs data, and the inflation, however they spin it, inflation's not bad and employment's good. I mean, where's the thesis to be lowering rates? We see that July cut dissipating more and more, right? So, data dependent. We do have some inflation data coming up next week, right?
What do we got?
So,
we got?
We got CPI on Wednesday and PPI on Thursday. So, and that's going to be coinciding with Thursday we get Delta, but doesn't JP Morgan have earnings shortly after that? It might be the following week. So a couple big catalysts coming up, the inflation data as well as the official start of earnings season, if you don't include Delta Airlines. So that's there's our macro talk, what we wanted to do at the beginning of the show. Let's get Datadog out of the way, Dennis. Post added to the S&P reaction here.
Yeah.
Came in yesterday.
Yeah, and we talked about this one last night in the STN room, and it had a big buy imbalance, but then kind of didn't do much. So it posted a 7.5 million share buy imbalance, 350. It pops $2 on that, but then it got ate up really quick, like offsetting as people are like throwing out orders to short it, which is offsetting the thing, and then it ended up not gapping up that much. It's up a little bit this morning. I believe the CEO was on CNBC, helped it a little bit here, but yeah, so it's officially in. What came out, we know, is Juniper, because Juniper merged with HPE. So Datadog is officially into the S&P. Now, you had the gap up always. You already had the gap up on the inclusion announcement. And, the official going in usually is another gap. So, but sometimes you can get a little buy at the end of the day. And we saw a little bit of that, but it got offset. So nothing really there. The other big news, which was pretty exciting last night, we covered this live in the STN room, and I know Joe was killing it in the STN room, was AES. We were trading this live, talking it live. Stock closed at 11.07. Bloomberg reports they are exploring strategic options, amid takeover interest. So they're saying they already had takeover interest, and now they're looking at their options. So the algos go nuts on this, because they just see takeover. And they're like, buy. Same thing. Thing went up to over $13, so it just blew higher. Went up to over 13, which it felt like it was overdone. Then she sells off a little bit there. And then she gets the CNBC pop back to 13.20. And then she sells off again. And I know, Joe, you were killing it. He says he paid for a year of STN with that one trade that we were talking and calling out there in the room, because we had 2 or 3 trades we were calling out on it. So I said over 13, like it's overdone. Like immediately I said, I think it's going to come. It was 13.20. And I was like, it's overdone. I think it's going to see 12.90. It was like 2 seconds later, a big seller came in and it was back down 12.90, 12.80. So, Joe, nice trading last night in that STN room.
This used to be one of my favorites back in the old Bright office. It used to be like a 50-50 $60 stock, traded good volume, and it felt like it had like a beta of 5. So like remember we used to listen to the squawk and they say Goldman's coming in, Bear Stearns is coming in, Shearson's coming in, they're all bids, and like you'd hear the roar and everything. And man, if you could lift, whatever was on the offer there, and then just throw it up like a quarter or half or 3/4, and then conversely, trading a big beta stock. Rumors are rumors. I check on the stock, every once in a while, and it's just been a dog. I mean, XLU. I mean,
Wow.
it's a foreign utility. So you
I don't
just
think it's
gotta.
foreign. I don't think AES is foreign. Is AES foreign? I don't think so.
It's a London company, isn't it? Isn't it
That's the
based in
headquarters.
London?
I don't think so.
I'm
Virginia,
digging.
Arlington,
I'm
Virginia.
digging.
Arlington,
Arlington-
Virginia. This is a U.S. company. AES.
Yeah.
Utility. You got utility, right? But not foreign.
I wonder why.
Arlington, Virginia. Now they may have foreign operations too. Headquartered in Arlington, Virginia.
They
One of
must.
the world's leading power companies, generating and distributing electric power in 15 countries, and employing
There you go.
10,000 people.
They must have.
Thank you, Google.
They must have moved.
Ha!
Yeah, probably.
Maybe
No.
they.
Oh, you know what?
Joel,
AES,
it's not, you dream stuff up. Like you're like, from the back of the day, you trade this so much. And sometimes, when you get 80 years old, you start confusing your dreams.
You guys are gonna.
I think AES has always been a U.S. company.
This is.
Sorry to pick on you.
You guys are gonna crush me on this one. Look at this. AES, Experiential Learning and Living Education Center in London, England. So there is an AES in
Oh my gosh!
These are not.
You company that all those years, and you didn't even know the company you're trading.
Yeah, I knew it was a utility. They must have expanded. They must have like bought or something, or a merger or whatever.
Or they became a utility.
It had a high beta. That's all I cared about. It really was a mover. So,
anyways, Bloomberg says might get taken over. They're looking at options. Who knows? I will know. All I know is the takeover ain't gonna be $20, not 18, probably not 16. I mean, it's a utility with a 5.5% dividend. Those things get 15, 20% premiums. Those are pretty good. So, I mean, it's already given you last night. It was giving you 17, 18%. That's why I thought this is overdone. I mean, almost 20% was up last night. That's overdone. Because I think when you're doing mergers, this isn't like an AI company. You're not getting 50% premiums, in my opinion. Obviously, I have no crystal ball or anything, but logically says the premium on a takeover is probably like 20%. You traded up that last night, so time to ring the register, in my opinion, when it goes up to 13s.
Yeah, we'll see. I mean, the resistance on the dailies. I mean, if you try and trade this technically at all, 1260, 1270. I'd say if it holds a bid there, maybe climb back up into the 13 handle. If not, you got a ways to go to fill the gap. But if there's rumors out there or something, it may come to fruition. We wanted to do a new segment today, and we can't use the title that I used because we don't want to say any bad words. But what was
stupid move of the day?
Yeah, we could.
A blank move of the day. Maybe let's call it stupid move of the day. We need an acronym for that.
Okay.
So you said it's sober. Sober is the stupid move of the day because you get these stocks that like go from like 3 to 5 and 6 and 10. Sometimes they're not stupid. Sometimes they just continue to go. But speculative move of the day, you could call it. Sober.
Yeah.
I don't know what the hell. I don't even know what this is. I've never traded it before. SOBR.
It is
trading 16 million shares this morning though, so it's dead serious about this. What's it do? What's sober safe do?
A non-invasive transdermal.
Hey Siri AI. Oh yeah, you're
spacer.
not Siri AI yet, so I can't ask you anything. Sober safe. Is that the company? Because
yes, and it's very intuitive.
Reliable 24/7 alcohol monitoring.
Yes.
Wearable alcohol sensor provides accountability. Oh, I gotta read about this. Discover next generation alcohol detection technology. So for you real drinkers out there that like to drink all day, every day, you can just have this on you. And you can just check your alcohol level and say, I better slow her down a little bit. I'm getting a little bit high. I mean, I get it for, is that what it is for real?
That's what
Is
it
this what this
is.
product is?
Sober
Shop our
safe.
products. Sure, we'll do that. Sober Safe. $199 plus your subscription is a game-changing fitness-style wristband for advanced alcohol safety. What? It's like you've got like companies that are like, fitness and stuff, and this one's all about like drinking safely. It's
It's for
game-changing
like
solution. This is
I'm
really
sure it's
cool.
I'm sure it's for like, like enforcement, people on probation, people, going through programs and stuff.
This game-changing solution for alcohol monitoring requires no administered or scheduled testing. Individuals are now independent from dehumanizing breathalyzers or fluid tests. Dehumanizing. I didn't know breathalyzers were dehumanizing. I really didn't know that. But anyways, okay. So Sober Safe. Interesting. That's your stock of the day. That's your move of the day. Very interesting, we'll say the least.
Yeah, I think it's kind of hard to do technicals on this one. I will, and this is financial investment advice. It's
Uh-oh.
never going back to its all-time high.
$800.
I got
I'm
20.
with you. Yeah.
I got
I don't think
20,000
Sober
on
is
my.
that. Is that the all-time high? 800 or you go back further?
I got
20,000. Oh,
20,000.
nice. Yeah, if you go
Yeah, I
back far
don't
enough, I
know.
see it. I have it $22,968 a share. When do you think it made that high? Back after COVID, when everything was just going to $1 billion.
This is sometimes our charts don't line up, but I have this back in 2012. But I mean, no shares. There's probably been reorgs, obviously reverse splits.
It's having its day. So let's not make fun of it today. 50% up today. It's been a place where shareholder money has gone to die, but today it's having a day. Congrats to the people who bought yesterday. Congrats to nobody who bought any time like the last few years, though, because stocks only went down. Okay, cool. 8:33. Got our guest waiting in the back. Is our guest ready?
Yeah. Is she going to give us a
thumbs
up
making
here?
people wait. Yeah, let's bring our guest on.
Good morning to Alicia Reese.
Good morning.
Equity Research, Wedbush Securities. Alicia, how you doing today?
Doing well, thanks. How are you, Joel?
We're doing good. We're doing good. So, should I go see F1? Or is it
F2? I mean,
yes.
Great cinematography. IMAX, I think, did a really good job using the, having their cameras available for a variety of different scenes. You see, similar to what you saw in Top Gun Maverick, the IMAX cameras are installed in the vehicles, similar to how they're installed in the airplanes in Top Gun Maverick. So it's pretty cool what you can see. I don't know about the storyline. I don't think I'm here to sell that part of it, but at least the IMAX aspect is pretty cool.
Okay, I think I'll go check that out. Well, we've had you on for a while, talking about the entertainment theater stocks. Let's just start with the big dog here, Netflix. Sure. I know you're covering that along with Michael Pachter, and boy, what a run! Street picking on it a little bit lately, right? Which I don't mind. I mean, after that kind of run. Yeah, so a little bit of a pullback here, down again today. We kind of had a leader to laggard trade, kind of up and down here. Give us your outlook for Netflix.
Sure. So I think there are a couple of takes here, a couple of reasons to still be positive on the name. First of all, I would totally agree that this name, with the run that it's had, with the valuation that it has, incredibly rich. It should be scrutinized very deeply. That being said, after we saw so much ARM improvement, this average revenue per member, and this just phenomenal subscriber growth over the past couple of years, and them not providing that information anymore, it will get a little bit more scrutiny now. We're still doing our survey work, which indicates some pretty nice subscriber uptick in the second quarter, which we hadn't really expected, to some extent anyway. The survey work we did last quarter did suggest that we'd see a lot of people starting or restarting their subscriptions who had churned out, and that's what it looks like that we saw. The ad tier continues to limit the churn, but those who churn out tend to come back pretty quickly, especially when there's content. And so Netflix's release slate was relatively sparse last year, and that was just related to the SAG-AFTRA strikes. Now that that's all behind them, and they have, clearly have the money to spend on content, certainly more than any of their competitors, they are retaining their users at a really high rate from what we can tell in our survey work. We're really excited, particularly about what we saw in terms of the mix. So a lot of the mix last quarter had gone to the ad tier, and a lot of people who are coming back to the service say they want to go on the ad tier. But what we saw is that a lot more people went to the premium tier. And the ad tier is not yet accretive. The premium tier just saw price increases. So you should see that arm really jack up pretty high. And we won't see that specifically, but we will see a nice revenue rise, I think, year over year in the second quarter. And that's incredibly profitable. And so you should see that free cash flow rise pretty meaningfully in the quarter and throughout the year.
What about moving into sports? I
Yeah.
mean, expensive.
Very expensive.
I know the Tyson Jake Paul fight, they had all kinds of glitches here, but I mean, is that going to be a potential catalyst or potential drag on the bottom line? That's these sports contracts are just crazy.
So in that, I'd say their primary competitors are Apple and Amazon. As sports continue to shift to connected TV from linear channels and linear outlets. I don't think that's always going to be exclusive, but we're seeing some kind of more niche sports head over, and then piecemeal on the larger sports. It looked like Apple just closed the F1 deal. That had been up in the air for a while. I thought Netflix was a contender for that, but it was reportedly incredibly expensive. And so let's let Apple deal with that on the dilution side. Obviously, I think they're going to get the most benefit because they showed the movie F1. So it made more sense for them to go after that piece of content. Netflix has WWE. I think they'll go for similar types of content in the near term, whatever's up for sale. And they will stick to, at least in the near term, they'll stick to this idea that, the dramatization of sports, stick to one-off events like the boxing, events like the Tom Brady roast, for instance. They'll do more stuff like that, and then they'll get piecemeal more sports. They do have the NFL, and while they had the glitches with the fight night, I think that was just a testing ground. They didn't have any glitches with the NFL at Christmas this last year. They're going to do it again this year. Clearly, that early signing and that early, broadcast of who's playing, it bodes well. The NFL was very pleased with how things went with Netflix. And I think we're going to see a lot more of that before Netflix does any more huge signings. In the near term, I don't think that's going to impact their numbers, their profitability very much, but they have so much money to spend. They're getting so much free cash flow right now with their global footprint. They really have a lot to play with.
Okay, stock that's been perking up lately here. Roku. We all know the astronomical level it went to back in 2021 when Comcast was going to buy it. I don't know if you remember that, but just slow and steady here off that April low, trying to clear the $90 level. Once again, falling in the laggard category. Talk to us about Roku.
Yeah, so I think Roku and Amazon, while they're competitors in the connected TV space, I think they're going to be the last two standing, frankly. I think they're both just very well positioned, and they just partnered. They're not even, it's hard to even call them frenemies. I think they're just really well positioned to collaborate on some aspects, and Amazon's just really digging in on the advertising side. And I going back to Netflix, I think we're probably going to see some sort of collaboration between Netflix and Amazon before long. So Amazon's doing phenomenally well in the connected TV space, but Roku just has the best platform. It's the most user-friendly, and there's so much upside to where it is right now. It's just really taking off on a lot of the ad elements. They're doing more direct advertising, DTC advertising on the homepage, on the pause page, and on the screensaver page. They also have a lot that they're doing with sports without spending a lot. Relative to, like, say, what Amazon's doing is buying a lot of sports they have the money to. But Roku just really cares so much about getting to that profitability, those profitability targets, and surpassing those profitability targets that they've set. And I think that's really encouraging to investors. For sports, what they're doing is just they have that sports landing page on their homepage that you can go to. And sports are so fragmented now. It's so hard to find what you want to watch. And so being able to just go there and find whatever it is, and Roku gets a cut of that as people sign up for those streaming services because it's so easy to find on their service. I think they can advertise on that page as well. There's tons of opportunity still here, and investors are starting to really see that.
Alicia, where does Fubo fit into this? Because obviously streaming sports, this was the thing of 2020, 2021 when it came out, and the stock just took off and went from 5 to 60 and it's come all the way back down to $3. Is there a place for Fubo? Like, is this a stock that could recover here? What are your thoughts here on this one?
Yeah, there's certainly a lot of recovery potential. What we're waiting for here is just for the deal with Disney to be finalized. So Disney doesn't really want to run the vMVPD portion of Hulu as it took that over, the full rights of that. It does want to run the streaming side of it, the direct-to-consumer streaming side, but the vMVPD is not really in their interest to run, and Fubo's already running that. And combined, Hulu Live TV and Fubo, especially with that sports focus, which is ever so important these days, together they can go up against YouTube Live TV, which is that's a tough game. YouTube has just taken so much market share there, and Hulu Live TV alone is having a little bit of trouble in that competition. But together with Fubo, and Fubo really doesn't have a leg to stand on, frankly, without that combination. But with the combination, their costs are lower, costs of content are lower, and they can actually compete. And they have the cash infusions they really needed to get by. So if that doesn't go through, I would be very concerned about Fubo. If it does go through, I think they have a fighting chance, at least for a while, as long as vMVPDs are, remaining in the market at all.
Another stock you covered. Oh, go ahead, Joel.
No, go ahead. I was just going to I'll let you go after this. I was just going to say Dennis, couple Tiger games have been on Roku, and I haven't been able to get it. So they're definitely expanding their content. You go.
Mm-hmm. Yep.
Yeah, so just taking away from streaming for a second here and moving into movie theaters, because you obviously cover a few of these here with CNK, IMAX, and you talked IMAX a little bit off the hop. But AMC, I mean, this again was a storied stock from back from 2020, 2021 when we had, these crazy moves, and stock goes from $2 to whatever it was, $600 at the highs after, if you did the split. It's back here to 2. Now, the dilution here was incredible. They kept selling shares. We know Adam Aaron was in there, and there was allegations he was selling shares. And then, so overall thoughts here just on AMC, because this is a stock that has really gone nowhere here except down in the last couple of years. Is there a recovery story for AMC, or is streaming just killing the movie theaters?
So we had a underperform on the stock and watched it go down. We've had a neutral on it for a little while now. I do think we're currently in a recovery phase for the movie theaters. It had been in great recovery period during 2023. And then we saw the SAG-AFTRA strikes really take the wind out of the sails in 24. We're right back on the recovery pattern. I think, it's not a high growth business, and so we're not going to compare it on a valuation scale to streaming. But I do think there are attendees that like the movies, and a lot of those people are the same people who watch streaming. All the data that we've seen over the past, 5 to 10 years indicates just a coupling of that, the user base. So the more you watch streaming, the more you probably go to the movies, and vice versa. It's not one-to-one, of course. You're going to have some people who only watch streaming, but there's pretty high correlation there. So people who like content and people who like the type of content that's in the movie theaters are going to go in there, and there's a lot more content. That volume is really starting to come back, and the quality it's there. If a movie gets good reviews, people are going to go see it. Superman is getting some good reviews. There's obviously some controversy around that, as there is so many, so often these days. But I do think you're going to see some really nice summer box office moves, and then you have a really strong fourth quarter. And so we're not necessarily going to get back to 2019 levels this year or next year, but it certainly can get back to that box office high point. With AMC and Cinemark, frankly, they're going to ride that wave. And AMC, after all this time of being a meme stock, it has the positioning to be looked at again by institutional investors. I think it's fundamentally sound at this point. And if you believe in a box office recovery, that would make sense. I think a lot of the noise is behind it. So we've been talking about this for a little while now. We're reevaluating at this point, and we'll come back to you as we take a deeper look on that.
What do we have? Well, first of all, Cinemark.
Why is it that? Yeah. Well, that's what I wanted to ask. I want to ask a specific question.
Cinemark.
Why is it that Cinemark has done so much better than AMC from a stock performance perspective? Because I look at the long-term chart of Cinemark, and we really haven't went down at all. Like 2020, it's the same price it was. So I mean, it's not saying it's done great, but it hasn't been down in the last 6 years. And AMC, over the last 3 years, is down like 99%. Is this all just because of dilution? Is that the main reason here that AMC has underperformed Cinemark so much? Because I see these both as movie theaters. It's amazing to look at Cinemark, not down at all, and AMC down 99%. Is that the dilution?
So the primary culprit for that, I would say, is that AMC, back when things were, going really well pre-pandemic, they had purchased several movie chains to become the largest movie chain in the world, and they did that on debt. So they had an immense amount of debt going into the pandemic, and that just put them in a very difficult position. Since then, they've had to dilute the share base significantly to just cover the interest expense, and they've done so many debt deals to get through that. Cinemark had to do some, but nowhere near as much. They've just always been very frugal in terms of acquisitions and in terms of debt service, and just keeping on top of it. They have a convert coming up next month, and I think once that's behind it, they're really in the clear. They don't have much to worry about, and their investors know this. Their investors know that they're very stable and cautious, but they do drive growth when the business is going well, and they have good management team overall.
Alicia, what do we have to look forward to in the back half of this year for movies?
So, I think there's one thing that's really important to note. IMAX has significantly more titles that were filmed on IMAX cameras this year relative to last year, and you're going to see a lot more marketing with IMAX. You're going to see a lot more movies in IMAX, I think, this year and next year. And so that's certainly a stock, I think, that's worth digging into. They have more footprint expansion than anyone else. They don't really have direct competition so much, maybe Dolby in a way, but they don't have the same level of competition. They're kind of standalone, and they have that massive global expansion opportunity and the market share opportunity with films. So that's an interesting one to look at here in the back half. You have a really good, back half slate. You have Avatar ending the year, starting what looks like to be a really good 2026 as well. So I'd keep an eye on that space.
Alicia Reese, Senior Vice President, Equity Research, covering media, entertainment, and consumer entertainment products at Wedbush. Thanks, Alicia. Always great
Thanks,
to have
Joel.
you
Thanks,
on.
Dennis.
And we'll dial you up next quarter.
Okay, great.
Thanks. Appreciate it. So,
A little quote breaking news here for you. I'm watching some price action. I'm sure a few people are watching some price action in Coreweave, CRWV company, out with a press release a few minutes ago. It was at, I mean, you can tell in the price section, it was a few minutes ago. Coreweave becomes the first AI cloud provider to offer NVIDIA's RTX Pro 6000 Blackwell GPU at scale. I said, quote, breaking news, because this is something that Coreweave previewed to us back on March 18th, 2025. They did a blog post saying, coming soon, we're going to be issuing this thing. Doesn't matter that this was kind of already out there. Just wanted to highlight some of the language here in this press release. One of the very first lines is, Coreweave is built to move at the speed of innovation. With the launch, Coreweave now offers one of the widest ranges of NVIDIA's Blackwell. Coreweave continues to demonstrate its ability to be first to market with the world's latest and most advanced hardware solutions. I'm reading these off and I'm being a little sarcastic because
I can
you
tell.
can detect some of these fluffiness. You can detect some of the promotionalness. Does it matter, folks, for a name like Coreweave? Absolutely not. Following this press release stock up about a good $2 here. A lot of people watching that. I just want to break in with a little bit of info there, folks.
I'll just repeat what I said earlier in the show, and if people weren't listening, I know we just got it going on Twitter here. If people weren't, missed the first part when we covered this, I mean, when you look at the ratio of Coreweave versus Core Scientific, they're buying Core Scientific. If you think that merger is going through, right now, I just did the math. At $14.27 is equivalent to buying Coreweave at $115. So why would I ever go buy $155 for Coreweave when I could buy it for $115 through CORZ? So just a better deal. Again, the borrow is what the risk arbitrage mechanism breaks down because the borrow is too expensive. But I mean, from this perspective here, Coreweave's going to go up. I got to think CORZ is going to go up here too. I know CORZ got downgraded today, but that was downgraded just because the merger's over here. But I don't know. Heck, I'm buying Coreweave. I'm buying CORZ right now. Screw it. $14.29. So just picking up CORZ, a bunch of it here right now. Because Coreweave wants to keep going higher. Eventually, it's going to drag CORZ up too, in my opinion.
I think, go ahead, Brett,
a little move here in Apple. Navarro saying, quote, Apple thinks it's too big to tariff. Not the hugest move lower, but it is a 60 cents or so here on this comment. Again, Apple thinks it's too big to tariff, a comment from Trump's trade advisor, Navarro.
What did he say? It's too big to tariff? What?
Too big to tariff. No, Apple thinks it's too big to tariff.
Oh. So they think they're just too cool for school or something?
Yeah.
I think they're more powerful?
You can't tariff us.
You think they're more powerful?
Yep.
I'm starting to not be a fan of Tim Cook, man. I mean, it's a bold thing to say, but I'm starting to not be a fan here. He's outsourcing to fix Siri because he hasn't hired he doesn't have the developers to fix Siri himself. And now some of the employees or some of the other guys are going over to Meta. What the hell's going on in Apple? I mean, can they get their crap together? And now they're flat out talking about being above the government. Is that from Apple saying that? Who said that? Apple.
That's Peter Navarro. That? Peter Navarro saying that Apple thinks
Navarro's
that.
saying.
Does that make sense?
That's a big difference.
Okay, so it's not coming from Apple. This is Navarro shooting off his mouth. It's the dumber than the sack of bricks guy just shooting off his mouth again. Okay.
Oh yeah.
Like Apple saying, I don't worry about us. But I don't know.
Apple down a buck
has
here.
Really lost its way here. Like, it needs to figure it out. The only reason the stocks went up over the last 5 years is buybacks and multiple expansion. Innovate, man. You guys were the leader. When Steve Jobs died, you guys were the leader of everything. Figure it out. I'm actually epically disappointed, with what Apple has done here, and really the underperformance in the stock. And it has underperformed over the last 2 years. It's gone nowhere in the last 2 years, and that equivalent time, the Qs are up about 25 or 30%. I mean, you got to start thinking about why. Why is that the case? And I think the case is the fact that they just don't innovate. And now this whole Siri thing, like I know the stock rallied $5 on that because Siri AI sounds really cool, but I think it's pathetic that they got to outsource that. And they're talking about going out to get OpenAI and to get other help with that to fix their problems. They can't internally fix that problems. Well, hire some better people. Figure it out. Got to find their way. Is Apple becoming Intel? There's a great comment there on the screen. I don't know. But I'll tell you right now, Apple needs to figure it out. I think they need new leadership there. So
I was just going to say that. I was just
I'm
going to
getting to
say
be
that.
done with Tim Cook.
I mean, he's been there a long time, and
Does he have a retirement plan here?
I don't know. We've been saying the same
64.
thing about
We
this.
need new leadership at Apple. I'm calling it right now. I'm the one starting this rumor here. We need new leadership at Apple here because they've lost their way. Figure it out, because you guys are just falling behind everyone here. And I mean, sure, but Navarro's saying that because he's obviously got a feel from management there that they aren't too scared. You know how Google is, they get called in the Justice Department, they don't show up, like stuff like that, just above the law. I hate that crap. They're above the law. Nobody should be above the law. So anyways, I'm not impressed with Apple whatsoever. I would maybe become an Apple shareholder again here if they had new management, because they've got, the name, they've got the cash cow of iPhones just to drive the bus. There's so many innovative things they can do, and they're just not doing any of them. Vision Pro was a flop, gave people headaches. Like, you didn't beta test that everybody's going to get a headache when they put this thing on? Figure it out, man. Figure it out. It's Rant Wednesday. I know that doesn't make sense.
I know. I like it, though. Do you think we have a better chance of getting Tim Cook on the show or Michael
Not
Dell?
now.
Or Michael Dell?
Well, Michael Dell, I think, does innovate. He does do the things right, and he does it at shareholders' expense. So that's where the problem was with that before. Like stock gets killed, he'll just take it private again and then take my shares away at the bottom. So you're trying to get me riled up here, Joel.
All right. That's the super easy setup of the day for Apple here. Pair of lows. Right. Yep, 208.60 splits those lows from the last 2 days. Got a hold. Hasn't hit it yet in the pre-market. So that's what and actually there's another low, 3 of the last 4 lows. This is called 208.50. So you haven't hit that yet in the pre-market. Dennis, has there been a lot of selling balances on Apple on the open too? I know you get
it has been a theme for a while. Yeah, there has been some.
Yep. And then also just sticking with that, Nike's had some consistent selling balances the last few days, and looks like they got their way yesterday a little bit. Okay, Microsoft crosses the $500. Oppenheimer moving this stock today. Actually got the 503. Man, if your target is 502.99, I would get out there in the pre-market. What does Oppenheimer have to say about Microsoft?
I can go check it out. Bringing up the note
outperform.
$600 price target. I'll give you color, man. I can give you color on these notes here. Street Insider is great with this. Oppenheimer raises rating for Microsoft to outperform Merc perform. Firm highlighted its growth, confidence in the company's artificial intelligence strategy, and sustained cloud momentum. We upgrade Microsoft to outperform and establish $600 price target. Highlighting investors' attention on the ramp of Microsoft's AI revenue stream will only increase as Azure's growth remains strong. Firm believes the market is still underestimating Microsoft's AI potential. Sustaining robust growth in its AI business is not fully in the stock. Seeing what is this rule of 60 described. Crucially, Microsoft is seen as one of the rare software companies capable of delivering what analysts describe as a rule of 60 business profile, a reference to companies that achieve strong revenue growth and profitability in tandem. Ooh, sounds kind of cool. Microsoft is one of only a few vendors in the software industry capable of delivering a rule of 60 business profile at an unprecedented scale, the note says. Oppenheimer, fully bullish. Getting on the bandwagon, buying Microsoft at all-time highs. Who say you can't buy stocks at all-time highs? Oppenheimer is doing right now. They're trying to get the 500 breakout going here, Joel. Can they get the 500 breakout?
Yeah, actually,
Asking my technical analyst. Who's
I
on the
mean,
team.
it did in the pre-market. I just think there's probably some, some paper stacked up in this one at 500, 501. If these are your targets, I mean, it just actually just ran up to the highs and just consolidated for a few days, and there it is. So,
let's do a fun exercise here before we leave. So Microsoft valuation, because people say it's 33 times earnings. So it's not cheap, but they have some growth there. Apple, 26. Okay, well, Apple's come down quite a bit, actually, on a forward basis. So Apple was obviously a lot more money before. So, yeah. All right. I'm done. That was it.
Okay.
I thought they were closer in PE. They used to be closer in PE, but because of Apple's underperformance as of late, Microsoft's outperformance, now the PE is expanded again on Microsoft. So at the same PEs, I would take Microsoft all day.
Hims moving right now, just out with the press release announcing their 2026 expansion to Canada following the completion of Zava acquisition.
Yeah, baby. We're getting
up
him.
about. Woo! There you go, Triple D.
Ric Flair. Woo! Hims.
Roddy Piper joins the show today.
That's Ric Flair.
Ric Flair.
Oh my God!
I can't believe I did it.
You can't do that to us.
Too.
The Nature Boy, Joel, the Nature Boy. We love the Nature Boy. Ric Flair. We got Ric Flair on the show. That would be just the best guest we've ever
He's
had.
a Michigan fan.
Can we get Ric Flair on this show just to give us some woo? I love Ric Flair.
Wow, that would be something else.
We've never paid for a guest before.
I would pay. Do you guys want to
out
chip
of my
in?
pocket?
We'll Come
on, let's get to
and we'll
YouTube.
see if we can get Ric Flair on the show.
Would
be cool. Ric Flair talking stocks live on pre-market prep. He's getting long. TKO. I don't know what he's going to short. I'm calling it right now. Let's go, Ric Flair. Woo! All right, that's a good way to end the show.
Okay, it is. All right, we'll do it. Talk to Mark Chaikin tomorrow. He's gonna be joining us, folks. Thanks for another exciting version of pre-market.